What is going on, y'all? This is Paid Me in Dividends, and I'm here back with another video. Today is December 7th, 2024. And before I get into the video, I just want to look over the portfolio very quickly. I'm at $87,465 as of December 7th. So if we look at my holdings have not changed. I still have 1,000 shares of AIPI and 1,000 shares of MSTY. Now, let's get into the topic of what I want to talk about in today's video. What I want to talk about are income ETFs that pay monthly income, but also have growth potential, right? And so if you notice, I highlighted potential because nothing's guaranteed. We know that nothing's guaranteed in the market, but based off of the history of these ETFs as of today, they have grown and they have also paid out monthly income, right? So they're not as high. The dividend yield is not as high as an AIPI or an MSTY, but they do pay a significant dividend yield every month, and they also have the potential to increase in share price as well. Now, one of these I've already spoke about in a previous video, but I do feel like it's worth mentioning again, which is SPYI. It is a very good income ETF. It's been out for a couple years now, so you do have some history, you do have some data that you can look back on it and see exactly what you're investing your money into. QYLG is also one that's been around for a while. I believe this is one of the older ones on this list, along with DIVO. But we're going to jump right into it, and we'll start from top to bottom. And so we'll start off with TSPY. So TSPY, let's go back to the chart. So TSPY, as you can see, has not been out very long. It came out August of this year, but since inception of August of this year, so about 3 months ago, 4 months ago, it's up about 6%, right? The share price is up about 6%. Now let's check out their website and see exactly what we're getting into. So as you can see, this is a SPY growth and daily income ETF. The ETF seeks current income while maintaining prospects for capital appreciation. The fund's secondary investment objective is to seek exposure to the performance of SPY, subject to a limit on potential investment gains. So basically what this is saying is you're not going to get the same exact gains as a SPY ETF, but you will get part of that. You will get some exposure to the growth, but at the same time, you'll get a 13% dividend yield, right? And it's paid out monthly. So this is one of these ETFs that can become a portfolio anchor, and you can count on it to increase in value, the share price. And at the same time, you can get paid monthly dividends, right? So let's look at the net assets. So the net assets, and this is something I spoke about in other videos as well. This is one of my only concerns, and it's not really a concern for this one because it's such a new ETF, so I expect this to be low, but it's at 9 million. I would like to see this around 100 million before I consider putting money into it, but it is at 9 million right now. Again, it is a newer fund, and the expense ratio is 0.68, which some people would say is high. I actually had somebody comment on one of my videos and say that some of the expense ratios for these funds are quite high, and I would actually agree with that. The only thing is you have to keep in mind that these are income funds, and what happens is these ETF managers are pretty much performing options on your behalf, extracting the option premium and then paying it to you in the form of a dividend. So they're basically the middleman between the options contracts and the premium that is made on those options, and then paying you in the form of a dividend The only exception is you're not actually doing the options. So I do feel like it's worth paying the expense ratio. It's pretty much baked into the dividend anyways. You don't really see it. And again, I don't mind paying a 0.68% expense ratio on an income ETF, because my whole point, my whole strategy is to build cash flow. So if that means I have to give up 0.68% to increase my cash flow, I'm willing to do that. But that's something that you would have to do more research on. And if it turns you off, I completely understand. But for me, I think it's completely worth it if you're trying to build cash flow. So we'll move on and look at the monthly distributions. Now, they've only paid 3 dividends so far. Again, this is a very new fund that just came out in August. So as we can see, their first dividend was paid October 4th at 29 cents, November 7th at 27 cents, and their most recent, a couple days ago on the 5th, at 29 cents. So it looks like, based off of this pattern, it looks like it'll be one of those that are very predictable, kind of like a SPYI, SPYT, FEPI. So these are one of the income ETFs that I spoke about in another video, that it can be a portfolio anchor, because you kind of know exactly what you're going to get on a monthly basis, more or less. It's not, the monthly payment isn't volatile, so it's very predictable. And so that could be a good thing, right? That can kind of eliminate or mitigate some of your risk, and you can get that steady flow of cash coming into your account every month. So this one is TSPY. I actually just came across this a few days ago. I read an article on it, and I thought it was a pretty interesting ETF. There's so many new income ETFs now. It's kind of hard to keep up with them. But this is just another one I just put on my watch list, and going into 2025, I'm just going to keep an eye on it and see how it performs, see how that dividend payout, the consistency of it. And again, I would also like to see these net assets, the assets under management, increase over time as well. So that's TSPY. So now we'll move on to the next one. We'll move on to SPYI. So I won't spend too much time on SPYI because we've covered this one in other videos, but I thought it was worth mentioning. It's been out for a while now. I believe it's been out since September 2022. So we have a couple years of data going into 2025. It's going into its 3rd year. And as you can see, since it's been out, it's up 8%, and it's up 9% this year alone. So we'll go to their website very quickly and just check out what they have going on over here. And so as we can see, they pay out their dividend monthly. It is at a 12% distribution rate, not as high as some of these other super high yield dividends, but there is a lot of money in this fund, right? There's $2.5 billion in this fund, assets under management, which is good. The more money that is in the fund, that means it's more liquid. That means the ETF manager, NEOS, is making more money, which is a good thing. It incentivizes them to continue keeping this fund active. And if they keep the fund active and they continue to make money, it trickles down to the retail investors like you and I, and we continue to make money, right? So everybody wins. It's a win-win situation. So I like the fact that there is a lot of money in this fund, and it does have a couple years of history. And so we can go down here and we can see just this year how consistent these payments have been, right? Starting at the top in January, 48 cents, 49, 50, 48, so on and so forth, right? These payments have been very, very consistent, 40 to 50 cents a month per share. And we can go to 2022. They have their 2022 dividend history on here as well. And they also have their 2023 dividend history as well. So I think SPYI is a very strong income ETF, especially going into 2025. It could be something, to put on your watch list and possibly add to your portfolio. So again, we'll move on to the next one because we covered this in other videos. The next one I want to talk about is QYLG from Global X Investments. Now, this one has been out since September of 2020. So this one is going on 5 years of activity. And as we can see, since the year of 2020, it is up 25%. And this year alone, it's up 18%, which is pretty good for an income ETF. Now, the dividend yield on this one is a bit lower, I believe, compared to the other ones, but you do get a lot more growth. So QYLG, some of you may be familiar with QYLD, which does have a higher dividend yield. However, it doesn't really grow over time. The share price remains pretty stagnant, but it does pay, I believe, a 12 or 13% dividend yield. Now, this one has a lower yield again, but you do get that share price appreciation. So let's see. So right now they're paying about a 5 to 6% dividend yield, and it is paid out monthly. But again, you get that growth, right? You get the share price appreciation, and right here you can see their holdings. So you can see their top holdings are big household names that all of us know about: Apple, Nvidia, Microsoft, Amazon, Meta, Tesla, Costco, Netflix, Google. And so yeah, this may be one that you can add to the portfolio if you do want some capital gains, if you do want some long-term growth, while still getting a 5% dividend paid out on a monthly basis. So I don't think I'd be investing in this because I am going for a higher cash flow. But again, once you have enough income coming in from your investment, your income portfolio, this could be something that lowers your risk, gives you a bit more long-term exposure, and you can kind of count on it to grow over the course of time while still getting paid a monthly dividend. So that's QYLG. Now we're going to move on to JEPQ. I'm sure a lot of you know about JEPQ. JEPQ is from JPMorgan, very, very big institution, right? They have a lot of money, one of the biggest banks, if not the biggest banks in the world. And so this is a pretty trustworthy ETF, income ETF. We can see that this one has been out since May of 2022. It is up about 16% year to date. And let's check out their website very quickly. So JEPQ is from JPMorgan, right? And so again, you get that growth, and along with the growth, you also get about 11% dividend yield, which is pretty good. 11% dividend yield is pretty good. So let's look at their dividend history. Let's see what they got going on down here. So when we look at their dividend, now their dividend does fluctuate a bit, but it looks like it's actually increased in the year of 2024. If we look at January 2024, it paid 39 cents. And then you can see it kind of goes up 34, 38, 42, 43, 44. And their latest payment in December 4th, was 50 cents. So it almost looks like the dividend amount is increasing and the share price is increasing. So this may be another good one that can be a portfolio anchor. You can get a mixture of growth and you can get cash flow on a monthly basis through JEPQ. So this is another one that's on my watch list. I don't have any money in it, but this is definitely an ETF that I plan on putting money into sometime in the future once I hit my monthly goal of cash flow. And yeah, this is one that I think should be on everybody's watch list, especially if you are investing for income. JEPQ is definitely the way to go. Again, it's a big name. It's JPMorgan, so you know what you're going to get from it. And yeah, so JEPQ was number 4 on our list. So the next one we're going to look at is GPIX. Now, GPIX is the S&P 500 Goldman Sachs Income Fund. Now, this one is a bit newer. This one came out October of 2023, And pretty much it's they sell covered calls on the S&P 500, if I'm not mistaken. We're going to go to their website here in a moment. But year to date, we can see that it is up 15%, right? So you're up 15%. And let's look at their website and see what they're actually paying. So GPIX, again, big institution, right? Big institution. So you know you're in good hands, right? It's not one of these newer ETF funds that you've never heard of. It's a big institution like JPMorgan, and it is a S&P 500 fund. So as we can see, their objective is to seek current income while maintaining prospects for capital appreciation. And so if we go down here, let's see if we can find the dividend yield here. I believe it's around 10%. Let's see. Let's see. All right, 12 month. All right, yep, here we go. So 7%, 7.9% dividend yield. And you also saw how it grew 15% just in share price this year. And if we go down here, we can see the dividend payouts, right? Going from back from 2023, we can see that it's been pretty consistent. 31 cents, 31, 32, 33, so on and so forth, with their most recent payment being 34 cents. Now this says October 8th. It looks like they haven't updated their website. But you know, maybe it's just, I don't know, maybe they're just outdated on the back end. But as you can see, the dividend payouts have been very, very consistent. So this could be another one that you could put on your watch list. And you know, you can get the growth and you can get the income. So just remember, you know, the whole point of this video is you're looking for growth potential and monthly income, you know. So for all of these ETFs, you can get a little bit of both. You're going to sacrifice some of the dividend yield, but again, you're going to get this growth, right, while still making that monthly cash flow. Now, the last one I'm going to look at is DIVO. Now, year to date, it's up 15%, and this one has been out for a while, since December of 2016, and it is up about 70% since 2016, and again 15% this year alone. Now this one is lower yield. I believe this one's around 4%, but it's just another strategy to put in your portfolio to just add some diversification. So as we can see, net assets 3.8 billion, which again is very good, right? Because it's liquid. That means you can trade in and out of it very easily. That means there's a lot of money in this fund, which means that Amplify ETFs is making money off of it, which is a good thing because they are incentivized to keep this ETF active because they're making money. And so if they're making money, again, it trickles down to the retail investor like you and I, and which means that we can continue to make money, right? Now, personally, this isn't one that I would invest in, to be honest with you. The dividend is just too low for me at the moment. Maybe in the future, once I'm ready to mitigate some of my risk and have a few safer plays in my portfolio. But if you're already at that point, or if you're a bit more conservative or risk adverse, I think this is a great one, right? You get the share price appreciation, but you also get a 4% dividend yield that is paid out monthly. And this one has a lot of history to it, so you kind of know what you're getting. These are the top 10 holdings right here, right? Caterpillar, Microsoft, Visa, Home Depot, Apple, you know, JPMorgan Chase. These are all big names, right? Goldman Sachs. And so as we can see, this is a pretty good one right here. And this is their distribution history. We can see their payments, right, have been pretty consistent. 14 cents, 15 cents, 15, all the way to their most recent payment of 17 cents. So it's been very consistent. It does pay monthly, and you do get some share price appreciation, right? And so we can actually look at what their objective and their strategy is, right? DIVO is an actively managed ETF of high quality large cap companies with a history of dividend growth, along with a tactical covered call strategy on individual stocks. DIVO is strategically designed to offer high levels of total return on a risk adjusted basis. Now, again, I just want to show you guys this, right? Covered call strategy. That is a options strategy. So just back to what I was talking about earlier, the expense ratio, in my opinion, is always worth it, right? Because what these companies are doing, they are performing tactical covered call strategies. And some ETFs are using different option strategies, but fundamentally they are basically performing option strategies and on your behalf, and then paying you out the option premium that is made off of these option contracts, and they're extracting that premium, and then they're paying us in the form of a dividend. So we don't have to actually learn the skill of options and losing money and breaking even and going through the headache of becoming skilled at options, because it is a skill. If you want to be profitable long term, you kind of put that risk into the company's hands, and then they pay you out that option premium in the form of a dividend. And then you just reinvest your dividends, you buy more assets that produce income, and so on and so forth. So I always think that the expense ratio is worth it with all things equal. Again, you have to do your own research and decide what strategy you're looking for and what your goal is for your personal portfolio. But again, this is basically what most of these income ETFs are doing, right? They're buying stocks and then they are performing option strategies on that portfolio of stocks, and then they are paying you out the option premium in the form of a dividend. And so I just wanted to go over this list of 6 income ETFs that have growth potential and also provide monthly income. One more thing before I check out here, guys. I just want to say again, I appreciate you guys checking out my videos and tuning in. The last video I dropped, which was 5 days ago, has 1,500 views, which is very, very cool, very, very nice. I appreciate everybody who's checked it out and left a comment or dropped a like. I had 227 subscribers when I dropped this video, and that was just 5 days ago. Now I'm at 275. So again, I appreciate you guys. I'm very grateful. I'm going to continue trying to be creative with these videos and pump out content whenever I'm inspired to make a video. And so, leave a comment on in the bottom. Let me know what you guys think. Let me know what your favorite income ETFs are. Let me know if there's a certain subject that you want me to cover, or a certain ETF that you would like me to cover. And also, if you're not subscribed, consider subscribing. And again, I appreciate you guys checking out my video, and I will see y'all in the next video.